Hello, everyone. Welcome back to the Daily Gold YouTube channel. And if you're new, welcome to the Daily Gold YouTube channel. This video is being recorded on the early evening of Monday, November 18, 2024. Thank you so much for tuning in for this edition of Macro Mondays. And in this edition, we're just going to explain everything that's going on in gold macro with respect to the market, more so than the economy, can be explained by one single chart. You guys have been following the channel for months and months. I bet you can guess what it is, but let me get right to it. So that chart is gold against the 60-40 portfolio. And if you need a reminder, what is the 60-40 portfolio? That is a portfolio of 60% stocks, 40% bonds. This is the classic investment portfolio that most investors, the set it, forget it types, invest money every month, invest for retirement. That's the typical portfolio that people have been investing in for decades and decades. And so this is extremely important for gold. So it's gold against the 60-40 portfolio. But here in this chart, I'm also including silver against the 60-40 portfolio. So this is a historical look. Well, not entirely historical because this starts in 1960. I mean, I could have started it back in the 1920s so we could see that the 1929 and the early 30s. But that aside, let me get to the focus here. So here we do have gold against the 60-40 portfolio. Here is gold in nominal terms, silver in nominal terms, and silver against the 60-40 portfolio. And so we can see here, this line shows when gold basically started its impulsive move up against the 60-40. We can see that's when silver bottomed actually, and that is when right about when gold actually broke out past this resistance here. Same thing happened here, or similar, end of 2001. Gold started moving up, and this was actually when gold broke 300. So when that happened, gold was strengthening in real terms against the 60-40, and so you broke out there alongside the nominal breakout of $300 an ounce. And this bottom actually very similar, or I shouldn't say similar, it occurred right around the nominal bottom in silver. But of course, silver against the 60-40, has its own signals. And particularly with respect to where we are here and now, let me stop for a second, go back to gold against the 60-40. This is where we are as of the end of October. Unfortunately, I was having an issue with stock charts. I couldn't quite get the data to update for the last few weeks. And I was also trying to draw this line here, and I had trouble with it. It kept saving, and it was all over the place. But, this line should be a little bit higher, showing the resistance here. But where we are here and now is, gold has pulled back. Before today, it was down 9% this month. And so it's struggling here with this resistance, even as it's broken out in nominal terms. Same thing for silver. It's been going sideways here. Gold's breakout carried silver above 26 and above 28, 29, that resistance. And so, big picture, if we go back and look at the secular bull markets, here and here, or I should say here and here, let's just keep it on gold. I mean, you can look at silver because they're very similar. We can see here, 2001 to 2011, those coincided with strong moves in real terms. And I mean gold and silver against the 60-40. That's against the 60-40. Boom. 60-40 here. Silver against the 60-40 here. Silver against the 60-40. So we have not really had that move yet. Not even close to it. Now, yes, gold bottomed here in 2016. It has trended up. It's more than doubled. But gold against the 60-40, it's made lower lows. It has not made a higher high yet. I mean, it's getting very close, but it's not made a higher high yet. And people, this is so important because, again, these secular bulls in gold, right here, and same thing in the 1930s when you look at gold stocks from 29 to 37, these secular moves in precious metals, they occur when the stock market falls into a secular bear. It fell into a secular bear at the end of 68, 2000, 2001. That has not happened yet. So when that happens, or even before it happens, we can see this breakout to the upside like that, this breakout here to the upside like that. What that signals is so much more money coming into gold and silver and precious metals. That is how and when you are going to see 3,000, 4,000, 5,000 gold silver break 50 and go to $100. You need precious metals outperforming the stock market. I've been saying this for years, and yes, I've kind of been wrong up until this point where they've gone up together, but people, it doesn't really feel like that much of a bull market. Like I'm looking at, traffic on my website and subscription numbers and those things. Yeah, they've been going up a little bit, but not the way they did when we were in a real bull market in previous years. And so it's not going to feel like a real bull market until you see this ratio breakout and this ratio breakout. This in favor of silver, this in favor of gold. I know I'm rambling on here, but just you have to look at this in terms of intermarket analysis. When the stock market falls into a secular bear, a huge amount of that money is going to be coming into gold and silver. Now, bonds fell into a secular bear in 1965 and also after 2020. I've showed this charts in other videos. So that is the 40% of the 60-40. So that's helping a lot. But to get the real big breakout, you need to see gold and silver outperform the 60%, the stock side. Just look at the last, 2 or 3 weeks. People are more excited about business in America. Maybe the dollar's rallying. Money's going into stocks. It's going into crypto. Crypto's a technology. It's not a currency. It's a technology. It's been trading like that since 2011. Again, I know I'm rambling on here, but you get the point. This is so important, and everything right now boils down to gold against the 60-40, and secondly, silver against the 60-40. So last chart here, more of a short-term look because on the last one I couldn't get stock charts to update my data, where it has gold going back past 1970. So we can see here, this is basically the same chart since the mid-90s. Gold here, bar chart, gold against the 60-40 here. Silver, nominal here, silver against the 60-40. And so we see a better look here of what gold and silver have to do. Here's gold against the 60-40. And again, last month I mentioned it. Last month it closed by a hair at a 3-month high. But remember I said this isn't really a breakout. You need more confirmation. You need a stronger breakout. Now it's coming back, after today, near almost 7.5% down this month. Silver against the 60-40 nearly hit resistance at the end of October. Now it's coming back. So we'll see. I mean, I would be surprised if this continued below resistance for the next 12 or 15 months. I think at some point in the next 12 or 15 months, we will see these finally break up like that, and that will obviously push nominal gold and silver much higher. It'll be the start of something really special. But we're not there yet, and it doesn't look like it's going to happen in the next few months at this point. So that's where we are. Let me know what you guys are thinking. When will we see a real breakout in a move in this and also this? Give me a guess. Give me a timetable. And again, people, I just, a lot of analysts, we complicate things. Oh, the crypto's holding gold back. There's not enough demand here. There's manipulation. This is happening, that. We can just boil it down to this chart here and this chart. When these things start moving up like that, then we know. It all boils down to that. So again, thank you so much for indulging me on today's Macro Mondays. Leave a comment. Let me know what you think. And I'll talk to you guys again on Wednesday. Have a great interview coming up for Wednesday. And hope you guys had a great weekend. Hope you have an even better week this week. And I'll see you guys on Wednesday for that interview. Thank you.